building specifications, builder's charges, etc. Flat measurements and UDS calculations as per sale deed. As calculated by association.
1. Casa Grande has offered sharing ratio of 62 to 38, compared to the 60 to 40 ratio offered by Romanium. 2. Total achievable area offered by Casa Grande is also higher by 2,216 SFT compared to by Romanium. 3. Since Casa Grande is offering 62% share to owners and shop owners, the increase in SFT works out to 2,974 SFT for owners, and the builder's share is reduced by 758 SFT4. Out of the 2,974 SFT increase to owners and shop owners, flat owners get 2,529 SFT, and shop owners get 445 SFT, totaling 2,974 SFT.
Romanium has offered 60-40 sharing ratio. Casa Grande has offered sharing ratio of 60-38. Calculations based on the sharing ratio are shown here.
1. The flat owner's share offered by Casa Grande is 50,974 SFT, compared to 48,000 SFT of Romanium, see previous slide, showing an increase of 2,974 SFT. The total area of 50,974 SFT, that is owner's share, is to be distributed to the owners with increase as shown here. Details have to recorded in MOU and JDA, after finalization between Harmony Welfare Association and builders, and the same details have to be registered in RERA also. Romanium has informed that the achievable area is 80,000 SFT and 60% is offered to owners. This chart shows that total present plinth area of all the flats is 38,520 and 60% share would increase it by 5350 SFT. The increase in plinth area would be about 13% to 14% as shown in the chart. In case the builder states that the increase in flat size of about 110 to 120 SFT will be utilized towards super built-up area, the matter has to be considered, and this would mean that the present plinth area will show no change. Builder has informed that if any additional area is sanctioned by the authority, it will be shared at the same ratio of 60-40. It may be noted that the present plinth area for all flats is 38,250, and the super built-up area would be about 5,350 SFT, as this is the difference between 38,520 and 43,870. There are a number of queries on cost of additional area and GST. All the queries have to be clearly addressed by builders. 1. Builder has to give the cost of additional area to owners for purchase of additional area, if the owners desire to purchase additional area. 2. Payment schedule should for additional area has to be specified and details recorded in MOU and JDA 3. The architect can finalize the building plan and flat plan after the flat sizes of owners opting for a change is noted. There are a number of queries on cost of additional area and GST. 1. Cost of additional area offered by builder. 2. Expenses towards GST for additional area purchased, if any. 3. Whether owners purchasing additional space have to bear any GST, or GST will be paid by builder in such cases, or GST is to be shared between owner and builder. 4. GST for flat owners who do not opt for additional area. Whether any GST is payable in such cases. Clear details should be mentioned by the builder in the offer letter, and should be recorded in MOU and JDA also.
Romanium has not categorically stated that one covered car park slot will be allotted to each owner, and has repeatedly stated that the car park will be shared on 60-40 basis. Car park is an important aspect in this redevelopment project. The commitment by the builder has to be specific and clearly noted in the offer document. Allotment of flats. There are different sizes of flat. It is generally referred to as a 1 or 2 or 3 etc. If the builder builds 10 or 1 type flats, their one owners will decide on the flats to be allotted amongst themselves and so on. It will be worked out by the association also. Ramniam has mentioned in the offer letter that Kone lift will be provided. Again, the number of lifts is not mentioned. Kasagran has quoted that one passenger and one cargo lift would be provided per tower. Brand would be Johnson or Schindler. The number of towers in the building and the number of lifts should be specifically mentioned. Lift is an important requirement in this redevelopment project. Both builders have offered non-refundable goodwill money. Ramniam has offered 1,20,000 and Kasagran has offered 1 lakh rupees. Kasagran is offering 2 lakhs refundable deposit. The schedule of payment and the schedule for repayment should be recorded explicitly in MOU and JDA. Developer shall 1. Bear all the expenses for obtaining patta in the name of the present owners from the Taluk office. 2. Obtain statutory approval for development of proposed project from CMDA and Greater Chennai Corporation. 3. Obtain the completion certificate from CMDA before handing over flats and shop to the owners. 4. Bear the taxes, expenses and deposits etc. payable to the government and statutory authorities with respect to the demolition and reconstruction of the flats and shops. 5. Pay all the statutory levies like property tax, water tax, and EB charges till the date of handing over possession of the property to the owner along with the completion certificate. The owner shall pay all the statutory levies like property tax, water tax, and EB charges till the date of handing over possession of the flat and shop for demolition and reconstruction to the developer. 6. All government levies such as GST and other taxes shall be borne by the builder. The owner shall be liable only for the GST applicable to the additional area purchased by him, her. 7. The owners shall in no way be held liable or responsible for any claim, dispute or liability that may arise between the developer and the nominees or other third parties. 8. The developer shall bear the expenses towards the stamp duty and registration charges for registering the joint development agreement, if made compulsory, by the statutory authorities and Government of Tamil Nadu. The timeline for each activity can be specified by the builders for the information of the owners. While it may not be feasible to accurately specify the timeline, a rough estimation or indication would be helpful. MOU would be on stamped paper, and the cost for MOU would be borne by the builder. POI would also be on stamped paper, and the cost including the registration cost would be borne by the builder. Builder has to specify if the JDA RDA, which would also be on stamped paper, would be registered, and if so, whether the cost of JDA including the registration cost would be borne by the builder. Charges borne by builder, as noted in offer document, is given here. It has to be ensured that these are clearly recorded in MOU and JDA. Every single item, including security room, association room, motor room, should be clearly noted in the MOU and JDA. Construction specifications are compared next. Construction specifications can be matched during discussion with the builder.